Hello and welcome to Smart Money, brought to you by Daily Investor. Well, we've heard it time and time again, right? Adequate offshore exposure should be a part of any balanced investment strategy. Leveraging global investment opportunities brings with it currency diversification for one, and so for South African investors offers one way to combat a declining rand. Sewnath, who's Deputy Managing Director at 91, joins me now to talk offshore investing, forming part of a powerful investment strategy. Sangeeth, thanks so much for your time today. So, before we talk investment strategy, what's your role at 91?
Good morning, Alishia. Thanks for having me. So look, I've been in the industry for about 25 years, at 91 for 23 of that. I'm actually by profession, so we try and do a lot of work that tries to help advisors understand and unpack things to encourage the right behavior. But my job's pretty simple. My job's to make sure that advisors solve for client investment needs. That's really it.
You make it sound easy, but I'm sure it's a case of easier said than done, especially if you're considering the current operating climate, right? Because with South Africa's growth potential marred by, amongst others, the electricity crisis that we're in and the recent rand weakness we've seen, safe to assume you've been tackling your fair share of questions around offshore investing right now. So, what are the main benefits of investing offshore that you're laying on the table for the clients you do advise?
Yeah, I mean, as you say, when it got to 1940 or 1950 to the dollar, it was clearly the only topic. Now at 1860, it's a little bit more diluted. But look, the benefits of investing offshore remain the same. The biggest one by far is to access investments, asset classes that you wouldn't ordinarily find in South African and emerging type of markets. So simple examples of that would be, for example, the technology sector, where you could access something like a Microsoft. You could access chip making business like an ASML. You can access consumer type of investments like Johnson and Johnson. And then, ultimately you're also reducing emerging market or South African political type of risk. So you're reducing that impact of emerging markets versus the developed market economy. And then, finally, it's really kind of hard currency spending. That's what it gives you the ability to do. So the offshore benefits remain clear, and irrespective of how much of volatility you've seen with Iran, those diversification benefits remain the long-term value that you get out of it.
Having said that, Sangeeth, I've read an article just the other day saying that taking your money offshore when the rand is at its weakest has been a losing strategy over the past 20 years. So, despite South Africa's current economic climate, to what extent have you seen clients actually delay their offshore investments because of the weak rand?
Yeah, I mean, look, we've seen that probably over the last 12 to 18 months. It's interesting. In South Africa, over the last 5 or 6 years, there's been two asset classes or investments that have been popular. One is the income side, given the return you're getting on income assets. So fixed income investments. And the other one has been offshore investments. And the change in the last 12 to 18 months is, given where the currency is, people have just stopped investing offshore. And this was, even way before it hit 19 to the dollar. At 17, most people were kind of thinking at 15 is where they would take money offshore. And so we've seen this kind of reluctance to invest offshore for at least 18 months now.
Is that the right approach? I mean, how much does the rand exchange rate matter in the long term when investing offshore?
Yeah, I mean, that's a great question. And that's what we think people are not paying enough attention to. So we've done, as I say, we try and help people solve for better investment needs and make sure they have the right behavior and investment habits. What's important is when people invest offshore, their time horizons actually are really, really long, and when you ask somebody, what is your time horizon when investing offshore? And I promise you, they'll tell you it's probably 3 years, maybe 5 years at a stretch. But the evidence is clear. So actual clients of ours who've invested offshore have a 25 to 30 year time horizon. So you've got to put that into context, right? So you've got to invest for what your time horizon is.
Yeah.
And if you look at the work that we've done, the evidence that we've built over many, many years, for long-term investing of 20 years, 30 years, the rand dollar rate only accounts for about 20 to 30% of the value that you get when investing offshore. What's far more important is where you choose to invest offshore. So I'm going to say that because it's an important point. It is far more important to decide where to invest offshore than the time at which you decide to take the money offshore. And people don't quite appreciate that. And sure, you'll get, kind of differences in valuations and prices of the dollar rate, but it's important to keep that in mind when you decide to invest offshore.
And this is some of the empirical evidence that you've actually managed to extract from the performance of the 91 Global Franchise Fund, over 15 years, right? Where you've been tracking the impact of the Rand exchange rate on offshore investments.
Yeah, exactly. And I mean, look, we're fortunate that clients have entrusted us with their money, and the Global Franchise Fund, the feeder fund in South Africa, is the biggest offshore feeder fund in the country. So it's important for us to make sure people understand what they've invested in, and they don't make short-term decisions, that are counter to what the fund's trying to achieve.
Yeah.
And I think most people appreciate the fact that the Rand is just a volatile currency. It's very liquid, which is good, but it means that it is very, very volatile. And this term's been used that it's cyclical. So it moves in far higher levels of uncertainty and volatility than most other currencies. But what's interesting is when you decide to invest offshore, the investments in a growth type of asset, and that's why we've used the 91 Global Franchise Fund, which a lot of investors have used, is actually counter-cyclical to the currency. So when the currency actually starts improving, the offshore investments by nature actually do a little bit worse. And then you get exactly the opposite. When you get the currency weakness, your offshore investments tend to do pretty well. And so it's actually this really, and very, very, very rarely does that kind of direction of movement actually change. And so, it's actually investing offshore into a growth asset like 91 Global Franchise Fund actually works really, really well together. What we have seen, which is bad investment habit when investing offshore, is South Africans going offshore and choosing to have their money sit in money markets type of accounts, so US dollar, euro, sterling. And the point there is that when you invest in US dollars, euro, or sterling, that already adds a lot of uncertainty and volatility to your investment. But to make it worthwhile, you've got to make sure that you're invested in something that's high growth potential. And so you can't just sit in cash, or income type investments for the long term only.
So up to this point, Sangeeth, you've dropped a lot of tips there and a bit of guidance along the way, right? But let's be a bit direct about this. What guidance are you offering investors when investing offshore based on your findings right now? I mean, you alluded to the fact that geographic exposure matters very much. So what's your thinking?
Yeah. I mean, look, you've got to take two things into account. You've got to take where you choose to invest offshore, and you've got to choose the time that you invest offshore. Now, you've got to give each one of it the right amount of time and effort, because, the point in time that you invest the currency is 20 to 30% of the value, and where you decide to invest is 70 to 80% of the value. If you look at our investment team's view at the moment from an portfolio management perspective, we still believe that the best opportunities sit in global equities offshore, and in particular, companies that have good, strong balance sheets that's generating good cash flows. And so that's Clyde Rousseau and his team in the quality investment capability. So we still think there's significant offshore investment opportunities. The time to invest offshore, well, that largely depends on the currency, and by valuation standards, the currency is weak. No matter what kind of valuation standard you look at 19 rands, it was fairly weak. But people only look at valuation when they decide to invest offshore. And there's two other very important considerations when looking at the rand. The second component is the fundamentals of the rand. Yeah. And the fundamentals basically say, how is South African growth looking relative to US or global growth? And on that front, we're actually not looking that good. How does South African interest rates look relative to global interest rates? And those combinations are not necessarily good. So the fundamentals don't look good. And then the third component, is really the sentiment. And sentiment is about load shedding. It's about political risk. It's all of those things where unfortunately we've scored a lot of our own goals over the last little while. And so valuations, absolutely, the rand is cheap. Fundamentals, sentiment is negative. And so you've got to combine this. And so the rand is, our sense is the rand is probably a rand, 2 to 3 rands, probably too cheap at the moment. And so you got to wait for a little bit of a pullback before you invest. But if you've got money to invest, there's good opportunities out there offshore. And it's not a bad time to start taking some money offshore if that's the intention, and not waiting for the perfect time to invest, because generally investors get it wrong when they wait for the perfect time.
Absolutely. Yeah, there's no perfect science to this. Sangeeth, if I to give you 20 seconds for an elevator pitch, right? Why should South Africans consider funds like the 91 Global Franchise and 91 Global Strategic Managed Fund when investing offshore?
Yeah, look, I mean, most people look at offshore investment and they think they can call the investments themselves, right? So they can call 5 or 6 global stocks, and life's pretty easy. You invest in Amazon, you invest in Apple, you invest in Microsoft, and life's pretty simple. But it isn't. And the last 18 months have been exactly proof of that. And so choosing a fund like Global Franchise Fund, it's got 25, 26 stocks in the portfolio, very good ideas in the portfolio that have robust investment processes to it, which has outperformed over the long term. And especially given the time and cycle that we're in at the moment, as I've said, you want that strong balance sheet, you want that high free cash flow, and that's exactly what it gives you. And so, if you're looking for a good global growth portfolio offshore, that's definitely where you want to be. And if you're looking for a bit of a mix of equities, a bit of income type of investments in your portfolio, your time horizon slightly shorter than something like the Global Strategic Managed Fund, which kind of gives you a slightly smoother ride than an equity type of investment, is the right option. But it depends on your needs, and you've got to be honest about what your time horizon is when you choose to invest.
Absolutely. Well, Sangeeth, it's been a pleasure catching up with you today. Thanks so much for your time. Sangeeth Sewnath is Deputy Managing Director at 91.